All right, thank you very much. All right. Hello, good morning from this part of the world, from West Africa, Nigeria. Good morning to you all in the house. And depending on whatever time zone you are tuning in from, I wish you a good afternoon and good evening to you. Happy New Week to everyone in the house, and trust you all had a wonderful and beautiful weekend because I did. Very short one. The weekend went just like a twinkle in a eye, and it was actually splendid. And how well are we all preparing for the new week? If you don't mind, let me know in the comment section what your plans are and what you're looking at as we prepare for the new week. For me, I'm very, very excited to welcome you all to yet another promising edition of the Forex Morning Mastery, our first edition for the week, as we are going to be diving into some interesting trading setup as we prepare for the new week. Well, as always, we have three financial instruments that we are going to be looking at this morning. The USOILSPOT, of course, this is what we normally look at. And then we have the USD JPY and the GBPUSD, which I have been contemplating on which one of them I'm going to take, because I don't take two currency pairs that have the US dollar together. I rarely take them. And both of them have very beautiful trading setups that we can actually capitalize on. And after taking into account the fundamental factors, that is the sentiments, the market drivers that is influencing the price movement, I have finally decided to take on the GBPUSD for the week. In fact, I already have a position which has been triggered. So we are going to be looking at the GBPUSD for this particular week. So GBPUSD fans, we are glad to welcome back this asset into our watch list after 3 weeks of break. So finally, we are also going to be taking on the XAUUSD, my favorite amongst them all, popularly known as the gold spot. And of course, we also have some interesting development in that particular market, which we are also going to be looking at today. Well, during the weekend, I was only able to upload one video that is on the XAUUSD. So today we are going to be doing a top-down analysis on both the USOILSPOT and the GBPUSD. So you don't want to miss out on this one. Grab your favorite beverages, what have you. Stay tuned in so you don't miss out on the valuable ideas we will be deliberating on today. And for those of you who are joining us for the first time, you are highly welcome on board. I'm very excited to have you join me this morning. And if you don't know, the Forex Morning Mastery is broadcasted 3 times in a week. That is Mondays, Wednesdays, and Fridays, 9:30 a.m. West African time, 8:30 a.m. UTC. I also want you to understand that the Forex Morning Mastery is not a signal service platform, but instead an educational avenue where we all come together to become a better trader, understanding the behavioral patterns of market participants through the lens of price action and fundamental analysis. So once again, you're highly welcome on board, and I do encourage you to actively engage in the comment section. And also remember to support the channel, and the only way you can do this is by clicking on the like button. So if you have found this content helpful, useful in making your independent trading decisions, I'll really appreciate your support by clicking on that like button right below this video. And thank you very much, guys, for your support. So with that said, everyone, let's dive right into the business. So as usual, the first thing we normally do, of course, is to keep tabs with the fundamental factors that will be influencing the sentiment in the market for today and maybe for the first half of the week. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, giving us that information and, most importantly, timing to strategically position ourselves for the next move. Now, based on the asset we are monitoring for this week, which includes the British pounds, the United States dollar, and of course the US oil spot, we are going to be focusing on economic features from both the United States and the United Kingdom economic docket. Usually, we prefer to focus on high impactful event. However, on days where there are no high impactful event, we would like to include into the filter mid-tier economic features as well. Now, for today, Monday, November 25, we do not have any high impactful event today, and the first impactful event for the week is coming up tomorrow, Tuesday, November 26, and that is the FOMC minutes publication. Now, today we are looking at a couple of speeches, especially from the United Kingdom economy. We are looking at Lombardelli, who is going to be speaking in the next 3 minutes. For those who don't know, Lombardelli is the Bank of England Deputy Governor, and she's going to be delivering a keynote speech today at the Bank of England's Watchers Conference. So definitely everyone will be looking forward to what she's going to say, as whatever she says is going to be carrying a lot of weight. She's going to be there is a likelihood of getting insight into the economic outlook of the United Kingdom, monetary policy decisions, and of course what I view as regards to fiscal policies that may likely affect the pound sterling. So this is one event everyone will be looking forward to. Then we also have another speech coming up in about an hour 30 minutes from now, and that is the speech from Dhingra. Dhingra is a member of the Monetary Policy Committee, and is going to be speaking to by 10:30 a.m. UTC. This is another event you want to be monitoring. I will definitely be giving us updates on what they say during my commentary tomorrow morning on my Telegram platform. So he's also going to be speaking in about an hour 30 minutes from now. These are very important speeches, especially in a week where there is no important, or let me say high impactful event on the United Kingdom economic calendar. So these speeches like this will be going a long way in informing market participants, investors and traders what if they will be holding on to the pound sterling or dropping it further this week. Then tomorrow we are going to be looking forward to a high impactful event from the United States, which is the publication of the FOMC minutes. This is another important publication that everyone will be looking forward to. And for those of us who do not know what this is all about, well, this is the FOMC minute is a record of the discussion and decisions made by the Fed officials during their last meeting when they decided on the interest rate decision. And of course, it's going to be providing market participants with insights into the Fed's view on the economy and future monetary policy. And it's also going to be giving us an insight into the ratio of voting during the last interest rate decision to see where the weight lies amongst the FOMC members. So this one here is coming in by 7 p.m. UTC tomorrow. So you want to be marking that one out as well on your calendar. Then amongst the mid-tier economic features for tomorrow, I would like to focus on the housing price index as it is related to the housing sector in the United States. The housing sector is considered to be one of the most sensitive area in the US economy, and of course it's going to be giving us an insight into how well the housing sector is. Now, for the housing price index, it will be providing us with an estimated value of housing market condition. It is also considered to be an indicator of the housing market, and generally speaking, a high reading will definitely be seen as positive, given some support to the US dollar, and if it comes in lower than market had expected, then it could bring in negative traction against the US dollar. Now, the previous month data came in at a 0.3% expansion, so market participants and economists are projecting another 0.3% for the month of October. So we'll be looking forward to what the actual data on that one is going to be like. So that is 2 p.m. UTC tomorrow afternoon. So for me, this is what I will be looking forward to, and except we also have a speech from the United Kingdom economy. That's UPIL, who is the chief economist and executive director for monetary analysis and research of the Bank of England. And one thing about UPIL is that he's also a member of the Monetary Policy Committee. So definitely whatever he says tomorrow is going to be carrying a lot of weight. So 3 p.m. UTC is that one. So we want to be looking forward to that one too. Of course, I will be giving us updates and highlights of the speeches. That is a summary of what they are saying in my commentaries tomorrow and on Wednesday. So these are the events we are looking forward to, at least for the first half of this week. And we all know from experience that the anticipation of this event usually has a significant influence on how market participants will behave. And the behavioral patterns of market participants will definitely reflect on the chart as price action, structural patterns that we as retail traders can actually use to strategically position ourselves for the next move. So with that said here, and with all of this information gathered here, let's dive right into the chart and let's see what is really going on in the market and how we will be preparing for the new week. So the first asset we are going to be looking at this morning is going to be the US oil spot. This is the first asset we normally take week in, week out. And of course, we have some interesting situation going on in the market right now. But before we go into the technical details, it's important that we also understand what is the driver of the sentiment in this market. What is really going on behind the scenes that influence how market participants are going to be behaving or have been behaving prior to the beginning of this week. Now, for me, if I look at it from an holistic standpoint, I still strongly believe that the US oil spot still has a room for the upside if we are going to be considering factors like the escalating geopolitical tension in the Middle East, and recently we have conflict involving key oil producers like Russia and Iran. Iran is planning a retaliation on Israel. Russia is raising the stakes on the usage of nuclear weapon against Ukraine and its allies. And this, of course, has continued to raise fears of potential supply disruption, providing upward pressure on oil prices, as a lot of marketers will want to accumulate much oil before any further escalation happen, and this could definitely drive an increase in demand for this commodity. And our simple economics tells us that when demand rises, what happens? Price will definitely rise due to this. So I want to bank on this as a significant factor that could push price to the upside. In fact, last week we saw how price was rising due to this geopolitical risk, and it is very likely that it will continue into this week too as well. Then another new development, which is a good news for buyers, is a very positive development coming in from China. China is the largest importer of crude oil in the world, the second largest consumer of crude oil in the world too as well. And whatever positive news comes out of China usually influence positively the rise of crude oil. So from the recent report we had, China's crude oil imports rose in November, and it was actually driven by stockpiling due to lower prices. and also Indian refiners also boosted throughout by 3% in October. So this for me is a good news for buyers of crude oil. If China's imports rose in November, that is definitely a good news. It shows that the economy may be gradually gaining some momentum back. Increased demand is coming in, and that could lead to activities that could influence positively the manufacturing sector, inflations, and the like. So this is a very positive signal from China for buyers of crude oil. Now, in as much as most of the fundamental factors support an uptrend in crude oil prices, we cannot ignore that oil prices stalled a little bit during this morning. We saw price do a little bit of bearish momentum during the early hours of today, especially during the Asian session, showing signs of consolidation after the two-day rally we saw from last week. So at this point, we also need to take into account the current bearish momentum to really know if this is going to turn out to be a retracement move, or price could lead to a sell-off for this week. So if we look at all of this factor, the US crude oil prices is influenced by a delicate balance of rising demand in major importing countries and the risk posed by geopolitical conflicts like the Russia-Ukraine war. Now, while these factors support prices, recent pauses like we saw during the early hours of today may suggest market participants may be taking some profits or waiting for further development before making any decisive move. So because of this information now and this recent development we really need to go back into the chart and see how market participants are digesting this information. If we can have any form of structural patterns that we can actually use to understand the psyche of market participants and use that information to strategically position ourselves for the next move. So what we are going to be doing right now is to have an holistic perspective into what is really going on in this particular market. And to do that, we will be scaling up into the the 4 hours time frame. So on the 4 hours time frame, I did not really go too far, as all I did here was to take into account the character of price action since the beginning of this month of November. So we are looking up at about an historical data of 3.5 weeks thereabout to navigate the current market dynamic. Now, one thing we've noticed since the month began is the fact that price action dropped from around the $72.50 area. This was at the beginning of this month, and we saw price drop significantly for about 2 weeks before sellers begin to struggle to continue that downtrend move. As you will see here, during the mid-month, sellers struggled, and we saw increased buying opportunity last week, which resulted into this current situation we are seeing right now, as price action is back into that supply niche where it started this month. Now, the question here is, will this area serve as another barrier for buyers, just like it did at the beginning of the month, to incite a sell-off, or are we going to see price break out of this structure to incite another wave of bullish momentum? So to help us navigate this market, I was able to identify a couple of structures, one of which is my key level for this week. So my key level for this week is situated along the $70 mark. As you will see here, it's a psychological level considering the round figure of that price. And of course, you will have seen how this level had played a significant role in determining the direction of price action since the beginning of this month. So if we go back to the beginning of the month, you can see how it was serving as a demand zone. We saw it here during the second week. It's also a demand zone. Then during the midweek, we saw a little bit of choppy market condition before price dropped below the structure. And by the end of last week, we saw how that same level had become a temporary demand zone going into this week. So will this maintain the platform for uptrend scenario? That is what we are trying to look out for. Now, besides the key level here is my trend line, capturing the series of higher highs in the last 2 weeks. And one interesting thing about the structure is how it also shares a confluence with the key level at the $70 area, as we saw price broke out of the structure on Friday. And from a technical standpoint, whenever price action breaks out of an important structure like this, we expect at some point in time price may come back, retest the structure in an attempt to continue that uptrend move. So this is basically what I am looking out for to continue that uptrend scenario. And if you look at what has been going on since the new week has begun, we've seen how price has dropped during the Asian session. How far will this momentum go? Will it test either the trend line or the key level at the $70 area before it continues an uptrend move? Or will it just start from halfway of the previous impulse leg? So I'm going to maintain a bullish bias as long as price remains above the $70 mark and that ascending trend line. However, in as much as the path of least resistance remains to the upside, we cannot ignore the potentials that sellers can also come into play. And if sellers are coming into play, where will be most suitable for us to join a bearish move? Of course, I would like to see price break down both the ascending trend line and the $70 area before I jump into a sell. Now, mind you, a breakdown is not enough for us to confirm selling ideas, as a breakdown here could still turn out to be a false one, leading to price continuing the uptrend scenario. So we would like to see confirmations like price coming back to retest structure, where continued selling pressure on our lower time frame will be enough confirmation for us to continue the sell. So that is what we are looking at on the US All Spot today. Now we need to break this down to look out for a framework after monitoring how market participants had reacted to the structure at the beginning of this week. So to do this, we will be scaling down into our execution time frame, and that is the 1 hour time frame. Now on the 1 hour time frame, we will begin to see things much more clearly. So right here on the 1 hour time frame, this is what I was able to come up with: a simple structural range bound structure. So this is where price started this week, as you will see here, around the $71.42 level, serving as the resistant line for this week. So this is the resistant line for the week here. This is where the bearish momentum began, and we saw how price dropped about 50 to 60 cents into the support line at the $70.50 area. And look at what happened as soon as price tested the $70.50 area. We begin to notice buy pressure for about 3 to 4 hours before this current momentum began. So for me, this is a very suitable area to look out for buying opportunity, especially as we consider the momentum since last week, which has been bullish. And secondly, price is above our key level at the $70 area. And thirdly, price still remains above our ascending trend line. So the bullish idea still remains very, very intact at this point in time. So I will be looking forward to buying anytime from this particular area. Now, for those of us who are yet to take advantage of this opportunity, well, I think we have a reversal setup around this area where the neckline will be around the $70.80 level. Let's scale down into the 15 minutes time frame to see this reversal setup. Okay, so here we have it. So this is the 15 minutes time frame, and we have a neckline along the $70.80 area. So I would like to give this a different color to emphasize its importance at this juncture. So we have the $70.80 level, right? I want to give this a purple color too as well. All right, so here we have it. So let me give a visual representation of what I'm talking about here. So we saw a drop down, price came back, and sellers struggled to gain momentum, and we are seeing something like this. It could turn out to be the neckline of that reversal pattern to continue the uptrend move. So we are looking forward to maintaining a bullish bias above the $70.80 level and ensure you have enough breathing space for your stop losses, which is going to be between 40 to 50 pips of stop loss. And let's see how the market is going to play out from this particular area. So I still maintain a bullish bias on the US All Spot. Now let's go back into the 1 hour time frame. So hold on a second. I want to okay, so let's go back to the 1 hour time frame here. So that is it. We have the $70.80 level. Now if price continues to climb, we are looking forward to adding more buy position at the breakout retest of the $71.42 level. And then if price gets triggered there, you move your stop loss on the the first position to either break even or some small profit, just to secure any that position in case of sudden pullbacks. Now, in as much as the potential of the uptrend is still very strong, I also want to mention here that there is still the possibility that we could get taken out of that position, where price drops into either the trend line to continue the uptrend move or the key level at the $70 area to continue that uptrend move. So we should not worry or get confused or feel anxious about any form of bearish momentum, as the structure still suspects that price could still go to the upside. Now, in as much as we're looking out for buying opportunities, what are the chances that sellers could come into play? Well, for me to join a sell here, I would rather want to see price break down the $70 mark, then retest it or retest the trend line, and I want to see continued selling pressure on my lower time frame. It could be the 5, 10, 15 minutes time frame, giving me signs that buyers are finding it difficult to climb back above that ascending trend line, and then that will be a good opportunity to sell. If this does not happen, I am not considering any form of sell on this particular asset. So let's see how the market will play out around this area. So we can see prices back into the neckline area. Buying above the $70.80 level is our plan for today, and then stop losses way below the previous low, which is about 40 to 45 pips, or you can increase to about 50 pips if you want to give enough breathing space for price action to move around. So this is what we are looking forward to today. I encourage us all to mark out these levels on your chart, as you will be needing them as a reference points to guide your independent trading decisions. So this is my simple view on the US All Spot. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. And don't forget to give that video a thumbs up, and thank you very much as you do so. So I see you, Wokocha Kingdom. Good morning to you. I also saw Free Emax. Good morning to you, Free Max. How are you doing today? I guess you're new with us. This is my first time reading a comment from you. Okay, I think I've read from Free Emax before. That picture on your profile reminds me. So well done to you. Glad to have you around with us today. All right, so in the absence of no questions, I want to assume that we are all on the same page. So that will allow me to move on to the next asset on our watch list for this week. So stay tuned in, guys. So the next asset we are looking at this morning is the GBP USD. Like I said earlier, after a very long deliberation whether to take the GBP USD or the USD JPY, both of them have very interesting and simple trading setup to use to navigate that market. And after also considering the fundamental factors, I have finally decided to take on the GBP USD, and in fact I already have a sell position which is currently running. So the little pause I did there before the beginning of the GBP USD session was just me trying to adjust my stop losses, moving it to break even, just to secure that position in case of any sudden pullback. So we are going to be looking into this together to see how the market is likely going to behave, at least for the first half of the week, taking into account various fundamental factors behind the scenes. Now, first of all, it's important to note that we do not have any high impactful event from the United Kingdom for this particular week. So the high economic features from the United States will play a significant role in determining how price action is going to behave. So except for the handful of speeches from the UK where market participants will look forward to have an idea of the economic outlook, monetary policy decisions from the perspective of the Bank of England officials. So, if you would ask me personally, I still strongly believe that the path of least resistance for the GBP USD is to the downside, taking into account the resilient nature of the United States at this point, which has been rubbing off on the US dollar. The US Treasury bond yield is very, very strong, and of course, the anticipation of Donald Trump's administration also is bringing in a lot of positivity into the US dollar at this point. However, if we take into account the economic data from the UK, you'll see that the economy hasn't been doing very well. Last week, we saw a weak UK retail sales data from the United Kingdom, where the data fell by 0.7% in October, reflecting a subdued consumer spending ahead of the new government budget announcement, which is currently weighing in on the pound sterling. Then we also had the UK composite PMI, which also came in below what market had expected, even below the threshold of the PMI index. Remember, I usually mention this, that the PMI data has an index of 0 to 100, where anything above 50 shows that that sector is expanding, and anything below 50 shows that the sector is contracting. So the composite PMI dropped below 50 in November, signaling a contraction as manufacturing activities declined and the service sector also stagnated, highlighting economic concerns at this particular point. So for me, I believe that I see that from report I have read so far, analysts are a little bit pessimistic, have a pessimistic view of the UK economy following the budget. The dampening sentiments for the pound continue to persist. So for me at this juncture and in summary, like I did say earlier, the US Treasury bond yield is doing very well at this point. We also Another thing that could favor the pound, and that reminds me, is market reaction to the U.S. Treasury Secretary appointment. So they're having a new secretary. What's his name again? It's Scott Bessent or something. I can't remember that name. Vividly, please pardon me on that one. They now have a new secretary, and this could probably be perceived or cause some little bit of anxiety over extreme tariff policies, and market will take some time to understand his policies and what will be driving his office. So this could bring in some little bit of skepticism into the market, which may likely favor the pound sterling. And of course, we also saw the expectations of gradual policy easing path for the United Kingdom, where market participants are suggesting that the Bank of England may maintain interest rate at 4.75% in December, which could also support pound sterling recovery at this point. Despite all of this, the British pound faces a mixed outlook driven by optimism around the Bank of England's gradual policy easing and a potential dollar weakness, if that is going to be the case, which I doubt. So this for me, let's see how the market is actually digesting all of this information, and let's see what is likely going to happen for this week. So to start with, we shall begin our analysis, I think, on the daily time frame. That's where I started my analysis for this week. And after taking into account the character of price action since the year 2022, that's about 2.5 years of historical data, it is quite clear that the market has been strongly bullish against the US dollar. As you will see, price had consistently found higher lows in the space of 2 years, giving us this major ascending trend line to work with. Now, one interesting thing about this trend line is that if we zoom into recent times, that is zooming into last week's trading session, you will see that price broke down the trend line a little bit, as you will see here, and this is the first time price would have broken down that trend line in the last 2 years, which for me is a very significant development and making us understand that we are at a crucial juncture. So we want to see how the market is going to be reacting to this trend line. Are we going to see will this breakdown of trend line turn out to be a false breakdown, where the emergence of a reversal setup here may be in the form of a double bottom structure, inverse head and shoulder pattern, falling wedge, whichever case it may be, to incite the uptrend continuation that started 2.5 years ago. So that is one scenario we are going to be looking at, and the other possibility is this breakdown turning out to be a valid one, where the breakdown retest will be all we need to confirm that sellers are getting stronger. So you can see we are at a crucial juncture, where depending on how market react to this area will determine what our next line of action will be. Now, in addition to that trend line is my key level for this week, which is exactly at the psychological level 1.26 area. Now, this level here had played a significant role in determining the direction of price action since last year, May, as you will see here. This area was a selling niche at some point, you will see, and then price broke out of the structure here in June, and for about 2 months we saw price trading above the 1.26 area before it got broken again in September. So you can see it has been played a significant role in determining the direction of price action. And for this year 2024, this same level had continued to be a strong buying niche. We saw that in May, we saw it again in June/July, and right now we saw a little bit of buy pressure again during the mid-month of November that we are in right now, and except for last week we saw price break down that structure a little bit. So now the question is this breakdown a true breakdown or a false breakdown? So to answer this question, we would like to scale down into the 4 hours time frame to see what structural details is around that key level. Now, scaling down into the 4 hours time frame, I was able to identify a structural detail after considering the character of price action since the beginning of October. That's about 7 to 8 weeks of historical data, and of course you can see price has been finding lower lows, giving me this beautiful descending trend line. Now this trend line here, prior to 2 weeks ago, it was serving as a support line, pushing price to the upside. As you will see, every time price gets to the support line, we see it climb to the upside. As you will see here, it continued to increase, showing buying strength. The same thing happened here. We saw price just continue to make use of that trend line as a support to push price to the upside. Now 2 weeks ago, price did something different. We saw price break down the trend line, and since that moment price action had continued to trade below the trend line, further emphasizing the strength of the sellers at this point in time. So for me, as long as price still remains below this descending trend line, it's more or less a bearish expectations for me. The dollar continues to gain strength. Remember, we talked about the fundamental factors behind the scenes, which obviously has been supporting the strength of the US dollar. Now, zooming into the nature of price action in the last 2 weeks, you will see that is our key level that we identified on the daily time frame at the 1.26 area. Look at what happened in the last 2 weeks. That same level was serving as a demand zone, as you will see. Then last week Thursday, price action broke down the structure, and from a technical standpoint, when price action breaks down a key structure like this, we do expect that some point in time price is likely going to come back, retest the structure in an attempt to continue the downtrend move. Now, due to this understanding this morning and the emergence of selling pressure right around that key level at the 1.26 level, which was broken last week, made me to join a sell from that particular area. And currently I have the sell running. I think I'm running with about 20 pips. Is it 20 pips? Yes, 20 pips profit. And like I told you earlier, I was moving my stop losses to break even just to secure that position in case anything happened from this particular area. So this is what I'm looking at the moment, looking out for bearish bias as long as price remains below the 1.2600 area. Now I will only consider buying if this 1.26 level is breached to the upside, retest of structure. I will join at the site of retest of the structure. However, as soon as price gets into the trend line, I will move my stop losses to secure the buy position and wait to see how the market is going to react to the trend line. Now, if the trend line gets breached and broken to the upside, it will welcome more buying opportunities for me. But if buyers find it difficult to break out and we start seeing continued selling pressure, this will definitely gave me an opportunity to join a sell. So with this simple information we have gathered here on the 4 hours time frame, let's scale down into the 1 hour time frame, that is our execution time frame, to see how price action has been behaving around this key level since this new week has begun. Now, scaling down into the 1 hour time frame, things will now become a little bit easier on the highs, as you will see now. So right here on the 1 hour time frame, this was what I was able to come up with. Now we can see that there was a very strong bullish gap here. This was where price action closed last week, and then when the new week began, price action started somewhere around here. So it shows us that during the weekend we saw a little bit of profit taking activities for the US dollar. Those who had capitalized on the strength of the US dollar in the last couple of weeks took some profits during the weekend, and since the new week has begun, you will notice that price action initially was confined within a range bound structure that is between the 1.26070 and the 1.25720, just right around that key level, to emphasize the level of uncertainty in the market at this point in time. And another thing for me is that this old indecision is happening around my key level for this week at the 1.26 area, giving me a lot of confidence that this is a key area to look out for long-term trading opportunities. So like I did say earlier, I already joined a sell right below the key level, and at this point we are at a crucial juncture. Now you know how we use our key levels in this community. As long as price remains within them, we exercise patience. We look out for price breaking out the resistance line to give us an opportunity to buy, or breaking down the support line to give us an opportunity to sell. So we already have a breakdown of the structure already. Price has done a couple of retests in the last 2 hours of the structure, and the current candle here still has about 21 minutes left for it to close. So selling below the 1.25720, that is for those of you who missed out on this breakdown here. Below the 1.2572 is another area to look out for selling opportunities, and because you are selling below the 1.25720, you want to be able to have a huge stop loss. We want to have enough room for price action to move around. So stop losses for this one will be about 40 pips minimum. We want to have your stop loss way above the resistant line of that range bound structure to capture any form of volatility or consolidation phase that could happen around that area. So for me, I took it here, so my stop losses is going to be very, very thin, as my stop loss is still way below, way above that. I think it was about 15 to 20 pips thereabout. So we're going to be giving room for possibilities of price retracing back into the structure to continue that downtrend move. So right here, price is below the key level at the 1.26 area, so we shall continue to look out for selling ideas as long as price still remains below the 1.2600 area. Now the only condition that will make me buy the GBPUSD this week is for the resistant line at the 1.26070 to be breached and broken to the upside. So that is the only condition that will make me buy the GBPUSD. So it's a simple trading setup we have here, a flat range bound structure. Price has broken down the support line, welcoming selling idea. Price is trading below the key level at the 1.26, welcoming selling ideas. And the only condition we're looking at to buy is if this resistant line at the 1.26070 is breached and broken to the upside. So let's keep this in mind. And then another thing I would also like to share with you here is this 1.2500 area, the support line for last week. If it gets breaches and broken to the downside again, I want to be adding more sell position at the breakdown retest of that particular structure. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give us an update on what I will be doing around this current market structure we are looking at. So this is my simple view on the GBPUSD. I encourage us all to mark out these levels accordingly on our chart, as we will be needing them as a reference point to guide our trading decisions, at least for the first half of this week. So I don't know if you have any questions. Feel free to let me know in the comment section. If you have questions, if you have need further clarifications, feel free. I'm here and very much willing to be of help in that regard. So I'll take the next 5-10 seconds off and see you around soon. Cheers. Oh, so free Emacs is the same as C40. Oh, wow, that's interesting to know. Okay, that's great. How are you doing? Glad to have you. Oh, thanks for the support, free Mice. Okay. So everyone, I really appreciate your support. Please give the video a thumbs up. We've seen over 11-12 people on board this morning, and the number of likes is way below even half of what the view is saying here. So I really appreciate your support. Some of us are still watching and you are yet to click on that like button. Please kindly do so. By clicking on the like button, you in one way or the other inspire me to continue to do more of this on every morning, and it also goes a long way in making the YouTube algorithm identify this video and push it to a wider audience of traders who may find the content beneficial to them too. So it doesn't cost anything, just a like. Click on it, and thank you very much. And for those of you who had clicked on the like button, I really do appreciate your support from the bottom of my heart. Thank you very much. So in the absence of no further questions, I want to assume that we are all on the same page, so we shall be moving right into the final asset on our watch list for this week. Stay tuned in. Alright everyone, so the final asset we are looking at for this week is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And what a start to the week we are looking at the moment, as we saw the gold spiral down during the Asian session. Price started around the 2,721.50, and since then we saw throughout the Asian session price drop significantly over 600 pips back to the 2,658. And why is this really happening here? Well, there is this, I think the sentiment of a strengthening US dollar is still floating in the market. market anticipation of inflationary pressures and robust US PMI data continue to support the US dollar, which obviously will negatively impact on the gold commodity due to its inverse relationship with the US dollar. Then, of course, the risk on sentiment in the market is also there. We had reports of potential ceasefire between Israel and Hezbollah during the course of the weekend, coupled with investors' optimism about a business-friendly policy from the Trump administration, reducing the appeal for safe haven assets. And of course, last week we saw the S&P Global publication from the United States, where we had some interesting figures too as well, which continues to support the US dollar. And as a result, I think the Asian traders favor the US dollar at the beginning of the week, bringing price significantly to the downside. And well, for me, I'm yet to take on a trade on the US dollar, on the XAUUSD. I'm still monitoring the character of price action, especially in the last 4 to 5 hours, as we notice some buy pressure resume in this particular market. So I will not be going to the higher time frame on the XAUUSD. I already shared a video during the weekend giving you a detailed top-down analysis on this particular asset. So if you missed out on that one, I will encourage you to watch that to see to have an a background knowledge of how we got to the particular point we are here, how we were able to identify our key level and the major trend in this particular market. So my focus today will be on the 1 hour time frame, which is our execution time frame. Now, before we go into the technical details, I still believe personally, this is a personal opinion, irrespective of what the market is saying, that the uptrend scenario in the gold commodity is still very, very intact, and this is due to the consideration of a handful of positive market drivers that is still going to be favoring the gold as we head into the new week. So we have recently we have a decline in the U.S. Treasury bond yield, which was due to the nomination of the new secretary as Treasury Secretary, who is expected to bring in fiscal conservatism into the picture, leading to a corrective dip in the U.S. Treasury bond yield as market participants digest the implication of this nomination on the U.S. Treasury bond yield. So that is one thing for me that I want to bank on. In as this goes on, there could be some renewed buying pressure in the gold commodity. Then expectations of inflationary pressure from Trump too as well could also favor the gold in a way that when there is high inflation, the value of the US dollar usually rises. And due to that, if it rises, gold becomes very, very expensive because gold is mostly a US dollar denominated asset. So it becomes much more expensive and reduce the demand for gold. So what people are doing right now is better to just buy gold right now when the dollar is not as high as it's likely going to be during Donald Trump's era, so that they accumulate as much as possible. And this could favor a massive appeal that will push cash flow into the gold market. Then the uncertainty over the Middle East conflict and the Russian-Ukraine situation may continue to increase appeal for safe haven assets such as the gold. Then finally, the Federal Reserve's likelihood of holding rates steady amidst inflation concerns continue to sustain some demand for gold asset commodities. So I personally still think that the path of least resistance for gold still remains to the upside. Now, if we look at the technical structure on the charts and comparing what is going on behind the scenes, let me just show you a tip of what we have on the 4 hours time frame. For those of you who saw my video, you will understand what this is, but for those who are yet to do so, let's quickly run through this 4 hours time frame together. So what I did here, I was able to identify a supply niche right here, which is between the 2,685 and the 2,710, and this was where the recent bearish move we saw in the last 2 weeks started from. And this was exactly after Donald Trump won the US presidential election. We saw this massive move to the downside, and since then the last 2 weeks have seen gold prices recover tremendously. I think over how many pips was that? Over 1,800 pips recovery in the last 2 weeks as it brought price back into that supply zone where it started last week. At the beginning of the month. Now, with this situation here, for those who saw my video, I was saying here that if price action breaks down the 2,685, considering the supply zone we identified here, coupled with the fact that price will be breaking down the support line of this ascending channel for the first time in 2 weeks, could incite selling ideas in this market. Now that price has broken down the structure, the question we want to be asking ourselves right now is whether or not this is a true breakdown or a false one. Well, to know this, we want to see the reaction of price action when it gets back into the 2,685. So like I did say earlier, I am yet to trigger any position on the XAUUSD for this week. So I want to see if the market will come back to retest the 2,685 or the support line of the ascending channel. Now, what I will look out for here for me to join a sell is if buyers find it difficult to climb back above the support line of the ascending channel, and this will definitely reflect on the lower time frame as continued selling pressure around the 2,685 or the support line of the ascending channel to incite a massive sell-off. That is how I'm going to be selling. We already have a bearish signal already. Price action has broken down both the 2,685 and the support line of the ascending channel. So what we are simply doing right now is exercise patience and wait for confirmation that truly sellers are getting the go in this particular market. So are we going to see price do a retest of structure, or will this all evolve into a downtrend continuation pattern that will incite a sell-off? Or will this whole breakdown turn out to be a false one where the breakout of the 2065 retest of structure will welcome uptrend continuation? Now, for us to be able to navigate this easily, we will go back down into our 1 hour time frame, which obviously is our execution time frame. And right here on the 1 hour time frame, this is what I'm looking at. So after price has dropped, we've seen some buy pressure resume in the last how many hours now? 1, 2, 3, 4, 5, 6, 7. Last 7 hours we've seen some buy pressure resume. Sincerely, if I was an Asian trader, if I was trading during the Asian session, this 3 bullish pressure here would have made me trigger a buy position. But when I woke up this morning, it's quite too late as price is far away from that support line. So I decided to wait a little bit and continue to monitor price action around this area. So what I'm looking out for here is to see how the market is going to be reacting to that key level at the 2,685. So if price gets into the key level at the 2,685 and I continue to see selling pressure around this area, I will be joining a sell at the breakdown of the neckline, and then a further breakdown of the 2,685 will welcome more sell positions for me. Now, there is a caveat to this old bearish momentum. Remember what we saw on the higher time frame. Price is still above is still strongly on a bullish momentum, and I was able to identify a trend line here on the 1 hour time frame, which could play a significant role in deciding our position for this week. So After connecting the series of higher lows, we have this trend line here. So even when we sell and have to sell position by the time price breaks down the 2,658, we want to, so as soon as price moves into or close to the 2,640 area, which is around that ascending trend line, we move all stop losses to the second entry point at the 2,658, secure all sell position while we wait and see how the market is going to be reacting to this ascending trend line. Now, if price gets there and we see any form of reversal setup like double bottom structure, inverse head and shoulder pattern, or a falling wedge, whichever case it may be, we want to be buying the breakout of the neckline to continue that uptrend move. So the path of least resistance still remain bullish despite a stronger US dollar. So we are going to be taking that into account when price gets close to that particular area. So that is what we need to take into account when we are selling. And if price goes ahead to do a breakdown of the trend line, then we want to be adding a third sell positions to our existing trade. Definitely I will be giving us updates on both my TradingView and Telegram platform. However, if that is not the case and instead we see price action break out and retest my key level at the 2,685, then I want to be going strongly bullish, looking to add more buy position at the $2,721.50 level to maximize the uptrend scenario. Of course, I will be scalping this market today. About 30 minutes into the New York session is when we will be starting the go-go challenge today. So for the go-go challengers who are still in the house, we are definitely going to be scalping the market today. And we have a little twist to it. I will be running a live commentary for the first 45 minutes at the beginning of the New York session, where I will be attending to your burning questions as regards to scalping the gold market and whatever things you will need to feel confident while scalping the gold will be duly addressed too. So I look forward to seeing you guys in about an hour or so from now. So this is my simple view on the XAUUSD. I hope I made myself very clear at this juncture. So I just encourage us all to mark out these levels and structures accordingly on your chart as we continue to monitor price action around this area. It's a simple trading setup. All we are doing right now, like I said earlier, I am yet to trigger any position. I want to see how the market will react to the key level at the 2,685 before I do anything. But if price does not go that far and it drops below structure, then we will have no other choice than to join a bearish move to the downside. So let's see how the market will play out. I will definitely be updating us as at when due on both my TradingView and Telegram platform. So let's see if we have any questions and updates or further clarifications needed. So I will take the next 10-15 seconds, and do not forget to give the video a thumbs up. Those who have done so, thank you very much. I really appreciate, and those who are yet to do so, please do. You will continue to inspire me to do more of this by doing so, and thank you very much as you do so. See you in about 5-10 seconds from now. All right. So I can see a couple of comments here. Hello, Torres Master. Good morning to you. Well, I did had a very wonderful weekend here, very short and lovely. I hope you had the same too over there. Glad to have you around with us this morning. I also saw Kingsley Johnson. Oh, thanks for the compliment, Kingsley. Kingsley is asking, I don't have your Telegram platform. Of course, my Telegram, the link to my Telegram platform is right in the description box of this current video you're watching, or you can see it scrolling at the bottom of your screen right now. Click on it and join us. It is free, and we'll be very glad to have you with the family. All right, so in the absence of no questions, I want to assume that we are all on the same page. And it's on this note we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. I really do appreciate your support and presence. Um, So we were able to take on three of the financial instruments on our watch list for this week, which includes the USOILSPOT, and we have introduced back into our watch list the GBPUSD after 3 weeks of absence on that one. And of course, we have some interesting setup on that one too as well that will be helping us guide our trading decisions for the week. And we also have the XAUUSD, my favorite, which is of course we are still waiting patiently for the structure to mature so that we can capitalize on that trading opportunity. So we have our structures marked out already. I do hope you've done so as well. If you have done so, well done and kudos to you. So all we need to do right now is exercise patience and allow the structures to mature. Remember, forex trading, financial trading is an uncertain environment, and due to this understanding, I do hope you have a well-defined risk management strategy in place to mitigate your risk. And for those who are joining us for the first time, I do hope you are able to gain one or two things from what we have discussed here today. And if you have done so, I look forward to seeing more of you. The more time you spend with us, the better you get to comprehend my analytical approach, which eventually will help you in making your independent trading decisions. So I look forward to seeing more of you on Wednesday, same time, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare ourselves for the second half of the new week. So looking forward to seeing you then. I wish you all the best of luck. Okay, Kingsley Johnson, I just saw your comment. All right, it's okay. Glad to have you around. You are wonderful, and I want to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.